Hey, what up, everybody? Froggy Stonks here. Nothing I say is financial advice, entertainment purposes only. Well, Meta's in the dirt. Whoop, whoop. That one's a good play. Space kind of bumped around exactly same place that opened up. No worries. We had a nice little run, but I got my call options down here when it dipped in the morning. I still think it's in reversal territory. Got a little more room to the end, so maybe Monday we see a nice pump on space. But we're here for APE and we're here for AMC. Pretty much closed where it opened. Same thing with AMC. I am actually really happy where the AMC price is right now. $3.75. If we reverse split on the 24th at $3.75, that will open up at $37.50, which is pretty good. And I want to cover some stuff because people are talking about the options chain this week. I want to really cover this because people are going, oh, it's put heavy, it's put heavy. Remember what we said in no options November and no options till December or whatever. The thing we did where we told retail community, basically, if you're playing options, they're going to rip us every time. So what are they doing here? The AMC options chain for the 25th is put heavy from $6 to $2. Call heavy from $6 to $3 with 12,355 open interest on the calls at $10 and 9,849 at $12, right? So here they are right here. This left side where my arrow is now, that's the call side. The right side's the put side. So the puts at $6, 12,660. You have actually 2,000. Sorry, I think the open interest is right here. But you have some really heavy puts around $4. Then 350 and 3 and then 2. But you have a lot of calls. I won't say the same amount. Pretty close though. Almost maybe heavier. You have a lot of calls in this area from 3 to 6. And then I'll just pull up the NASDAQ chart. At 10 and 12. So if anything, I think the amount of puts we're seeing on the stock for the 25th actually hedging. You're right here at $10. You have, let's see, volume, open interest. You have 210,000 in puts at $10. Oh, that's August 18th. I'm sorry. Hold on. Let me scroll down. Duh. At $10, you have 12,355 calls. 12, you have 9,848. You have some put action on the $10 line, but it gets really heavy around 6, 5, 550, 6, 550, 5, 450, 4, 350, 3, 2, 250, and 2, right? So really heavy on the put side next week, but we still have a lot of call stuff going on here. And look at this. Look at the call options on August 18th. Which is in 2 days. We have massive call options on August 18th. $210,000 in puts on the $10 line. Why would you do that? Why would you buy puts at $10 when the stock is sitting around, what is it, 375 right now? It doesn't make any sense. So what they're doing here is they're hedging, and I think they're hedging because of the arbitrage. Now, arbitrage players are short AMC, long on APE, long on the bonds, right? So it would make sense for them to hedge against their long position. I think what's going to happen is they're going to go in to covering on there's probably already a FOMO event happening now, which is why the options chain is exploding. The FOMO they're trying to control, which I believe is why Fidelity just crashed the other day. But they're going to go ahead and try to hedge themselves in where they're long on APE, they're short AMC, but they want to, in my opinion, they want to cover those AMC shorts into their APE being converted long on AMC so they can cover into their own position rising in value. As they cover their AMC legacy shorts, their APE converted AMC Neo AMC will go higher and higher and higher into the settlement period, which is Monday, right? Now, on most reverse splits that I've seen on meme stocks, and I'm talking Cosm, I'm like 3 other ones that I was following, they reverse split, it went up, it spiked in price, and then it dropped. But those companies were not AMC theaters. Those companies were not playing arbitrage. Those companies didn't have bondholders in super deep to the point where APE in the arbitrage would allow them to put meat back on the bone on AMC common stock so it can be reshorted, their bonds value up, and Adam Aaron pays a premium after the capital raise. So anyways, pretty big open interest on the call options at $12, $10. And then you start really seeing it kick up at $7 and then $6. And there's 61,304 at $4. Meaning there are a lot of people thinking this thing is at least going to go to 40 to 60 bucks. Now, Goldman Sachs has a $175 price target. I highly doubt that happens. They put those price targets out to make you think it's going there so you get stuck in the play when they dump their shares. But to have this many puts on that day, trying to balance out what they have on call options, more or less, one, a lot of people are selling these instead of like institutions buying them and stuff like that. There's probably some serious hedging going on. There's probably a lot of smaller investors that are out there buying the crap out of these options they're selling because they know exactly where the price is going to go. In my opinion, on the 24th, we're going to reverse split. We'll open up at $35 to $40 just based on AMC legacy common stock price. And then we will start walking to the upside as shorts cover. They're going to push some of these call options into the money before Friday, August 25th, which is Friday. These are going to start going in the money. The APE is going to get converted. And then not only are they going to make money on their APE going long, they're going to make money on their call options printing and going in the money too. And guess what they get to do if these go in the money? They can exercise those the day of conversion, right? That's a really big deal that people are not talking about. If their APE is converted and flies into the money and they bought call options down here at 3, 350, 4, 455, and AMC runs to say 100, 110, 70, something like that, they can exercise their right to those shares for very, very little money, and they can make bank off that. Normally, I would tell everybody that I do not believe the call options are going to go in the money, but I've started watching what they're doing on the stock. Like the other day, when I told everybody at 315 on AMC, I said, I'm buying AMC call options. And it was an absolute win. I think it was like right down here. I bought AMC call options here. I tweeted it. Boom, boom, boom. Got rid of them here. This is right when Fidelity crashed. And now we're just kind of skirting around there right now. So there's so many ways that the shorts get to make money on this. AMC shorts, one, are bondholders. Some of them are bondholders and they're long on the debt and they're getting paid. One of the bonds is yielding like 37%. So it's pretty crazy. Two, they're short AMC and they're in the money right now. More than likely they're in the money on their short position. And it's getting really crazy because short interest has went back up to 850%. Three, when they start to cover their AMC shorts on the 24th, when the reverse split happens, we open up at $35, $40 due to the reverse split. They start covering those AMC shorts. Boom, 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 $50, $60, $70 maybe. I'm not going to get greedy on it. There's so many price targets out there. But their short position will be cleared into the APE converting. When their APE converts the next day and they've cleared their short position, they are going to make a ton of money on APE converting up at such a high value that they can look into dumping it as Adam Aaron announces there's raising cash, meaning also their call options go in the money. So the 28th is when the settlement comes out, right? So if they are also entitled to settlement shares, they may let it linger in a higher price until the 28th. They get their settlement shares. Then Adam Aaron announces a capital raise and they knock it back down. I will be looking to sell on the 24th, the 25th, and the 28th. If I see it go over 50 bucks, I'm going to unload a portion of my position. If it goes up 60, 70 bucks, I'm going to unload another portion. If it opens up at 35, 40 and it looks like it's just going to dump, I'll just dump everything all at once and get out of the play. I'm not going to let AMC on my position go below $35, right? If I see it trying to dip below 35 and getting into the 30s, I'm out because I'll still be positive. I'll still be up over 70% on the play, and that's just how it's going to roll. So you got to prepare for that. You cannot sit and think in your mind, oh, this is definitely going to $100 because somebody said so, and until it does, I'm not going to sell because that's what everybody did last time. You got to learn your lesson. So I'm going to wait and I'm going to watch. If I see it dipping, I'm going to get out. I'm going to be happy. I'm going to move on to other plays. If it doesn't dip and it reverse splits and we see it just start pinging up, I'm going to hold on until the conversion. If it pings up, and we get 50, 60, 70 bucks into the conversion, then APE converts and we see a spike, I am going to sell before the second halt triggers. Be prepared for halts. Anyways, I wanted to cover that. I wanted to cover the options chain stuff. Everybody's freaking out about the heavy puts being loaded up in this area here, but more than likely it's probably some type of hedging they're doing against their long position, right? So in that, if they're short AMC and they're going to cover into their long position, they're protecting themselves in case something happens and AMC collapses. If they start trying to cover their shorts and it's going up and they're making money and AMC for some reason collapses, their puts will hedge any longs they have on APE. But if, in my opinion, if their plan works, they'll be out of their short interest. They'll cover their AMC. They'll be out of their AMC short interest on the legacy side. The price will run up. Then their APEs will convert into a much, much higher value, which is worth way more than trying to short the stock down from 30, 35 bucks because the bondholders want to get paid. So you got to look at where the incentive is. I think the incentive here is for shorts to cover so their longs go way up in value. And with that, when APE converts, you got to understand APE doesn't have any pressure from the options chain. When we see stocks that don't have pressure from the options chain, like DWAC and APE, they have amazing runs, which happened when APE was distributed. Back on August 22nd, we ran to 1050 from $5. So there's big incentive there for a big run on this stock into them covering so that they can be paid out better on the bonds, but they'll also be able to short this thing back down if they let it run way up and they cash out 200-300%. They make another freaking whatever percent gain on the downside. Then Adam Aaron pays them out on the bonds. And then potentially Adam Aaron comes out with the covenants gone and says, well, I'm going to do another special cash dividend, which then institutions will own most of the stock. So wanted to do just a quick video drop. Sorry, I'm kind of rambling, but this one's hard to explain to everybody the way I want to, because not everyone understands the options chain. But in my opinion, the options chain is incentivized, set and incentivized for AMC short sellers to cover on legacy shares so that their APE shares converted, fly through the roof into the 25th, then into the 28th. So we'll see though. Don't take my word for it. Plan your strategy. If you've been down for 3 years and you finally break even, literally just take your money back, man. Because if you break even and you wait and then it goes down again on you, you're going to just hate life. If you get back to even, or even get back to where you're only 10% down on this play and you've put tens of thousands into it, take your money back. I can play riskier plays because I am up on my position right now because of the thesis I've been playing for over 12 months. I have a higher risk profile. If you are down and you make your money back, take your money back. Do not risk it again. There are other better, safer plays where you can slowly learn how this type of stuff works in the market. Either way, good luck, guys. I'll see you tomorrow. If I get any big news, I'll come back on and stream. I'm just watching the airwaves like everybody else, and every time something keys my interest, I'm going to make a video on it and try to explain it to the best of my ability. So y'all take care. Frog Sonics out.